Ramosele Ziba is one of the investment analysts at Avrinvest and is here this morning to take us through whether we should buy into this turbulence. Some technical analysts around the world says you should buy the dip. Is that the way things should go? We have a few things to discuss about the global space and our own market. Good morning. It's good to have you.
Good morning, boss.
Thank you. You lose much sleep over the last few days?
Well, not necessarily.
But I'm sure you watch more of the market news than other things.
Yes, I mean we've been keeping track of the market, and like you mentioned, for about the past 4 days, we've seen the massive sell-offs that we've seen in the market. Although yesterday we started to see some recovery, especially in later trades in the U.S. markets, which obviously opened after ours had closed. So we believe that from trading activities today, we might start to see some improvement. But reports, global reports around the world point to the fact that the dip that we've seen in market performance in the last couple of days has been tied to expectation of higher interest rates, given rising
in the U.S.
Yes, from the U.S., given rising inflation numbers that we've seen, which is also in line with guidance provided by the FOMC from last year with regards to possible rate hikes this year. I mean, the new Fed chair, Jerome Powell, also shares basically the same ideology as Janet Yellen, who's just left the position. And we expect that he would follow in that line, although we don't necessarily believe that from the first meeting or first FOMC meeting of the year, rates will be adjusted upwards. But going forward into the year, we expect to see
that's most likely March, between March and September. The FOMC meeting of last week was essentially a transition from Janet to Jerome, as it were. So, but again, why does the market actually felt that this transition somehow the market should be punished severely, or the market should get so jittery that trillions of dollars were wiped off the books?
Well, with the rising, with the expectation for higher interest rates, we also this would make investing in fixed income instruments more attractive, given the expectation of higher yields. But the thing is, we also have to consider the fact that we've seen a significant rally in the market over the last year, and it's safe to say that it was time for some sort of correction in the market. So you have investors taking profits in the market as well. So that has also contributed to the negative performance that we've seen.
If everybody's looking at this global correction, and I was asking, what does it mean for our own market here? Are we in our own correction?
Well, yes, it's safe to say we're seeing some sort of correction, because on Monday you had the market down about 84 basis points, yesterday about 87. We've also seen some profit taken in some of the stocks that had rallied significantly over the past month. Some of the penny stocks, likes of Skybank, and some other penny stocks that were obviously driven by speculative trading. We started to see some profit taken in those stocks. But regardless of this, we believe there are still opportunities in the market. And like you mentioned, buying the dip. So for investors who have a more medium to long-term view on the market, following a price decline, you can take position in fundamentally sound stocks, especially ahead of the release of
Should I get scared?
Results.
Year to date, I'm seeing a negative 1.05% on our equities market. Is this giving me, is this a bit of a blip on my radar that, hold on a second, maybe I should sell in May and go away?
Well, year-to-date performance of the equities market is actually it's actually positive at the moment, about 14.7.
Oh, yeah, 14.7. I beg your pardon. It's month to date. I beg your pardon. Yeah, I need to take that back, folks. Yes, 14.73%, but a negative 1.05 month to date. So do I need to get scared of that at all?
Well, not necessarily. It's pretty much still the first full trading week of the month. So might as well wait it out till the end of the week and see what's actually going on in the market before making any rash decisions. But like I mentioned, if you're an investor who has already been in the market, you've made significant profits, you've reached your threshold. So assuming you had a target that you set for yourself before you invested in market, if you've reached that and you think you're satisfied with what you've made, hey.
14.73 since January the 1st, I'm almost beating inflation.
Essentially, yes. You've made significant gains in the
And I'm
market.
slightly ahead of the NPR.
Yes, you are. So like I mentioned, it's been largely positive all through. So this has been one of the factors that has also led to the profit taking that we're seeing in markets. So you have some investors saying, oh, they've made gains in the market, and it's time to take a step back and maybe put funds into fixed income instruments where they know there's little to no risk, although their returns will be somewhat limited, but they're fine with that.
Are there phone calls to you folks who are fund managers, asset managers over the last couple of days, folks who believe that, hey, is the storm heading towards Nigeria? Anything like that?
Well,
you got a few phone calls?
We've had a couple of conversations with some institutional investors as well. But the thing is, as opposed to the expectation that they'll be thinking of leaving the market because of the sort of global negative sentiment, there's still that clamor for what stocks to actually buy in the market. Because if you think about the fact that there's a lot of funds at the moment currently tracking various markets, looking for the best opportunity to come in. So you still have a lot of investors who still want to come into the market despite the rally that we've seen.
It's like swimming in the ocean.
Essentially.
When the tide comes in, you know how to go.
Yeah.
And when it goes down, you know how to swim. So if that is the sentiment, therefore, if I should buy the dip and I'm looking at that, if the stock market is falling, there's nowhere else to go to buy the same stocks.
Pretty much. So in a situation like that, it would be best to ensure that you've built your portfolio around fundamentally sound stocks that have historically been able to swim
on the tide.
Yes, exactly. Deliver positive returns.
Give me what sectors. If you look at our market, although relatively small, but I'm sure those who know and who understands the numbers and the market knows where the umbrella is and when it is time to have some sunshine, where to pack things.
Yes. Well, like I have mentioned, our top pick will still remain in the banking space, especially among the tier 1 banks. I mean, we're more optimistic on Access, UBA, which have more upside potential, especially in the short to medium term. Also, we're positive on Zenith and GT as well. But our top picks, if you have to take position in the banks for now, will be Access and UBA. Also coming down to the industrial
defensives.
Yes, they've been quite defensive over the years, and in terms of the opportunity for capital appreciation, that still exists. And in the industrial goods space, we're looking at the likes of WAPCO, which hasn't benefited significantly from the rally that we've seen in the market. From the release of their full-year results and even their Q1, we expect to see what sort of improvements have been made following the rights issue that was implemented last year. Just try to see what the company as a whole is doing now, and we believe this could potentially guide investors' decisions.
When earnings begin to trickle in, and with the tracking turbulence in our own market specifically here, because I'm sure we have our own nuances when it comes to the market. Every market has its own nuances anyway, so we have our own. Where do you think the offsets usually come from when it comes to the Nigerian market space? Equities.
Well, for equities, for our market currently, like I mentioned, we're more optimistic on banking space, industrial goods. Maybe the downside that we might see might be in the oil and gas sector. We know that for the downstream players, we aren't so optimistic on their earnings, given some of the issues that we've had. And if you also look at performance in 2017, for the oil and gas index, which lagged for most of the year, the major drivers of the late appreciation that we saw in that space was due to activities in the upstream players, likes of Seplat, Oando as well. And we know Oando has been on technical suspension all through. So our outlook towards the performance of the oil and gas sectors, especially downstream players, still remains largely negative. But for a host of the other sectors, for consumer goods, we've seen the economy come out of a recession. We've seen increased spending. We've seen costs also reduce with the improvements in FX liquidity that we've seen in the market. And we believe all this will culminate into a positive performance for this.
If I'm looking at the global market route as we've seen since late last week, and now tapering a little bit, and we hope things stay that way, what should be the key headlines, news, or whatever to watch if I'm a local investor, whether I'm institutional or retail, when I'm looking outside the window and I'm looking at Wall Street, I'm looking at Frankfurt, I'm looking at China, and perhaps other emerging market, and see, hey, hold on a second, where is the next windstorm or headwind? Where is it coming from? And if I'm going to look local, then where do I take it? We have a number of companies that have a number of a decent exposure to the global structured holdings.
Okay, well, the thing is, for the peculiarity of the Nigerian economy as a whole is it's largely dependent on activities in the oil market, essentially. So when you have oil prices rallying, historically we've seen that the market also moves in line with that. So as oil prices remain high, we see external reserves continue to improve, which means that CBN will be able to maintain the sort of FX liquidity, improved FX liquidity that we've seen in the market. It's going to be largely positive for our market. I think the only domestic headwind that could potentially arise, which will probably be in the second half of the year, will be tied to politics. So the stability in polity and expectations for the 2019 general
Do you think dollar position vis-a-vis other major nationals in the basket, like the Chinese yuan, the Japanese yen, the euro, and the pound, should be a concern for me if I see dollar strengthening or weakening, and I see what that could mean for me in terms of the value of what I hold in the Nigerian market?
Well, not necessarily. For Nigeria as a whole, if you have the dollar strengthening, that's going to be positive for us, for our external reserves as well, because our major dollar inflows is from oil, which is priced in dollars, so it'll be positive for us. So
should I watch what international investors are buying? If I'm buying 100% local, should I need to look global? I say, what are they buying? Where are they going? Because there is always a time when foreign investors swoon in on the market at some point, and some other times when they're getting ready to fly out of the market, I can also take the next plane with them.
You know, it's funny you should actually mention that, because in our Nigerian economy and financial markets review and outlook that we just launched 2 weeks ago, we had a particular investment strategy that was centered around what foreign investors usually buy when they come into the market.
Hold on a second. Hold it there. What do they buy when they come into the market? Remosele Aziba, our investment analyst from Afrinvest, will continue that conversation, and we'll move that into the FI space. It's called the fixed income, the debt market, when we'll come back after the break. That's the part 2 of the program.